Session highs here.
Yep.
Makes sense?
Yeah, it does as a tension release. Market's been capped by just this kind of idea that we're perhaps entering some escalation phase or maybe not a de-escalation. It makes sense to me given where we've been in the context. We finished September with the S&P around 3,000. And we went down a few percent. We've been kind of giving back and retaking the same few percent. So it does make sense to me given how subdued investor sentiment and positioning and everybody very downbeat. You also have a lot else going on. Treasury yields have taken flight. You've uninverted the 3-month to 10-year curve. A lot of the things that we've been harping on as signs of risk to the outlook have been lessened or removed. And so I do think that's why you have this little bit of a relief trade today.
Gene, looking across the tech universe right now, I mean, so many names are rallying in the midst of this broader trade optimism. What names do you like? And would you be playing some of these potential trade headlines right now with stocks, or would you be steering clear?
I think the trade is going to work itself out. I would largely steer clear. And to answer your question, where I'd be investing ultimately is in, I think at the top of that list is Apple. I realize your previous segment addressed that, but some of the commentary out there around why this story can be much greater, I have a different view. I would assess most of the street, including the last segment, is more or less kind of the same view around Apple, that this is a product cycle story. Obviously, the iPhone is important. But I believe that there's 50% upside to Apple stock in the next couple of years, more or less $350, based on what is a shift to investors viewing this as more of a consumer staples company. This is the only company that can bring together hardware and software and services. And so if you give it a Coca-Cola or Procter & Gamble multiple, that's where you get to that. So that's Apple. I think that this has measurable upside. As a former sell-side analyst, you'd always get nervous about putting a price target too far ahead. And I think analysts are just kind of inching ahead of this. But the reality is they need to just take a fresh look. And I think that will yield much higher price targets. The other one, much more controversial story, is Tesla. I think that Elon Musk is a flawed personality by all measures. But I think that what they're doing in terms of tapping in that electrification curve is going to ultimately yield increased value of Tesla in the next year.
Interesting. A name, I think, that has the highest percentage of sell ratings, Tesla?
Tesla,
I'm not sure, yeah.
They essentially lost the benefit of the doubt of a lot of the sell side, for sure. There wasn't a lot to hang on, once it sort of lost a lot of the momentum that it was really going to be ramping volumes more than expected. So I do think that makes sense. It's idiosyncratic, though. It doesn't really reflect anything but Tesla's fortunes and the sentiment around it. And even Apple, to be honest with you, I'm on board with the idea that it's about people were quite cautious as it reapproached these highs. The consensus rating on the street, there's a consensus target on the street, was where we are right now. And now I think you have people just sort of like incrementally ramping that up. But I don't think it tells you a tremendous amount about the overall market complexion.
Right. Well, I mean, day's not over.
No.
And market is going to want to hear that tariffs on Tuesday don't go up.
That's basically, to me, the toggle is, is the removal of the tariff threat. Is there no longer an overhang, something we have to worry about, even if it's deferred? I mean, think about what happened the first half of September. The market went up after this big, fearful August, and it wasn't because trade was fixed. It's because we had a date on the calendar, and it looked like possibility for more positive than negative. I still don't think trade has been the ultimate swing factor for where the market ends up, but it's been this interim restraint for a while right now, especially on sentiment and risk-taking.
Gene, the other big story that's going to move markets next week is earnings season kicking off in earnest, and we get that first name within the FANG complex reporting Netflix. What are you expecting?
Not good. I think that, they guided for a nice rebound in subs after that difficult June quarter. Not sure how September plays out, but based on some of the loose commentary from the company, the stock has already reacted in part to this. I suspect that they're going to have a more apprehensive view of December. Obviously, the two big competitors will not have been in the market when they do that earnings call, with Disney and Apple coming in the next few weeks here. But I suspect that the guidance is going to be a little bit choppy. Keep in mind is that this model is effectively upside down. I agree this is a great service. Netflix is going to be around a long time, but they have $12 billion in debt. They have been funding their content costs with debt. They are essentially trading dollars for dimes when it comes to content spend versus subscriber revenue. And in order for that model to work, you have to raise pricing. They've done that 8 times over the past 4 years. The probability of a price increase was reduced dramatically in the last few months with this new competition. And so I suspect that, that this is going to be a tough road. Great service, but I don't see it being a great stock.
Goldman had a great chart yesterday looking at their user base and their pricing over the past few years, even as they did have some streaming competition, like they haven't had the sandbox completely to themselves.
That's very true. And I think the question is, the user growth, the sub growth is going to be still extremely important, because the other way that you can get to this model working, of course, price increases would be great. But if you double the sub base, you start to have the network effects work a little bit. You can scale it a little bit, presumably. But the market is no longer confident that this company is on a path to double, subs over the next X number of years. And so that's why I think the doubts come into how fast they can get huge, as opposed to whether, in fact, people like the service and are going to keep subscribing to it.